Hi, I'm Mike Bernick, and welcome back to Money and Markets Extra. Well, earlier this week, we learned that housing starts soared last month to the highest level in 7 years. And that's creating some buzz around housing stocks this week. So, is now the time to buy the home builders? Not so fast, says our interest rate expert, Mike Larson, editor of the Safe Money Report. And we have Mike with us today to tell you about the one sector that stands to benefit even more than housing in today's environment. Mike, welcome back.
Thanks, glad to be here.
Well, housing demand has been picking up recently, but you've seen even better opportunities elsewhere. Tell us where.
Sure, it's financial stocks. I mean, they're really absolutely on fire, especially the regional banks. And ironically, it's actually thanks to rising interest rates. Specifically, financials are benefiting because of the way the interest rates are climbing. You have long-term yields that are rising at the same pace or even faster than short-term rates. That means the yield curve is steepening and it could widen even more.
So you're talking about the spread between long-term rates the banks charge for on mortgage loans, for instance, and the ultra-low short-term rates that they pay to get deposits.
Exactly. That spread has been widening in recent months, and investors know that the end result of that is increased profitability for banks. It's like a profit margin, and they rely on that spread income for a significant chunk of their earnings.
And this could be a real game changer for financial stocks because they've been under pressure for a very long time due to ultra-low rates.
Oh, absolutely. I mean, spreads have been compressed forever, and on top of that, you have the fact that bank stocks remain cheap. Plus, you throw in those strong housing starts and building permits data, and that kind of just adds to the positive vibe because it suggests that their mortgage business is going to remain relatively healthy.
So financials are a big sector covering a lot of stocks. What are some of your favorites right now that you think are best positioned to take advantage?
Sure. Well, the core healthy regional banks are a good place to start. I mean, for instance, you could buy something like the SPDR S&P Regional Banking ETF, which is ticker symbol KRE. But one of my favorites in the sector is BB&T Corp, ticker symbol BBT. That bank should benefit from widening spreads, and they've also been building and expanding their footprint through a lot of smart acquisitions.
Okay, well, thanks, Mike. And that's why you may want to take a closer look at financial stocks right now for new opportunities, courtesy of Mike Larson, editor of Interest Rate Speculator. Thanks, Mike.
Thank you.
And thanks to all of you for joining us again today for Money and Markets Extra. Good investing.